Hello, friends. Welcome back. I hope again this week also our market is so high. Everybody would have felt that FOMO kind of feeling right now, right? Fear of missing out. That you guys would have left out the chance or something. Don't worry about that. So this video is mainly for people who want to learn and benefit from finding undervalued stocks by themselves. So this video is completely about learning how to find undervalued stock. Okay, using this lesson, you can easily learn and you can apply by yourself. It's a very simple trick. And this is Sundar, and you are watching Mindful Finance. Okay, so as I mentioned, today we are going to deep dive into how to find undervalued stock. Because if you go and buy any stock at this point of time, everything is in high at all-time high. If you buy, your profit might be very less. So we have to find which stock is currently performing low because of certain reasons, and there's a potential for the stock to grow further. That is what we are going to check. So let's jump into that. I'm going to use app called Ticker Tape. So it's a very easy then screener for filtering out certain things. Screener is mainly I use fundamental analysis and get some high level view very quickly. Ticker Tape is mainly to filter out my stock. Screener also you can do, but it has a experience wise it's a little bit complicated, but this will be very easy for you. Let me show you how to create this. Okay, so now create the custom query here. So you will get all the list of stocks. You're having like 4,749 stocks are there. Now from this we are going to find out undervalued stock. How are we going to do? So I'll give the idea about how the thought process behind this one. Think it this way: when you are saying undervalued stock, what is undervalued stock? Which means performing worse. It is performing worse than Nifty. That is the first criteria. Second is comparing with the set. Sometimes the sector itself might be underperforming in the list of sectors. Like comparing to other sectors, one sector might be underperformed. So currently you would have noticed that IT was underperforming a long time, and currently it is also getting into momentum. You might be struggling to find out which stock I should find out. All the sectors are currently in a better shape, in a better position, and all are performing good. So how do I find a undervalued stock? The first thing is, as I mentioned, you have to compare with the Nifty. Then you have to compare with the sector PE. Then third, you have to compare. You have to find the 5-year how it is growing. And the fourth is your technical analysis. Find out how the chart pattern is, how the price action is currently. And fifth is you have to read through the news. So this is the 5 steps you have to follow. So I'll go step by step. Let me show the first step how to do that Nifty analysis. How to compare the Nifty, how it is performing. Coming here, add a filter here, which is I'm going to compare with 1 year return versus Nifty. If you see, this is 1 year return versus Nifty. If you see first Reliance Industry, right? Reliance itself is minus 9.74, which is 9% or 9.74% lesser than Nifty in the last 1 year. Nifty has given a 13% or 13.5% return in the past and in this 2023, and Reliance is given lesser than that, minus 9 from 13, minus 9.74% lesser than Nifty's performance. Tata Consultant, even TCS has performed as underperformed. But if you ask whether I need to go and buy this one, it looks like underperforming stock, right? But I feel like still it is not as low as IMX. We need to find really deep undervalues. How to find that? So now add the next filters. Now I need to find out stocks which have performed consistently in the past 5 years. So go for 5-year return. So my 5-year historical growth I need to check. Okay, and 5-year EPS growth I need to check how the EPS growth is, and 5-year margin, profit margin I need to check. So you are getting 5-year growth also now. So if you see 5-year average growth, average revenue is 17.25. This is 10.31. Net profit is 7.71. So you can see average, there's a positive growth in all this. So that's another scenario, another good point. Now again, in this current year, what is the net margin, net profit margin for this current year? Current year is 7.49. So you can compare. Okay, we'll compare later point of time. So we got all this data. Now we have PE also. Now I need to have a sector PE. Now if you go PE, there is a sector PE. So go with the sector PE. So basically what you need to do is this PE minus sector PE you have to do. Okay, I have already created a filter, but for your understanding I'll just create one. Click on the custom, and here you have to create PE ratio minus sector PE, and you can give a name here, whatever name you want. Since I have already created, it won't allow me to create, so it is already there in my filter. Say so this is my filter. Apply it. I get that my filter here. Okay, so but what I need is negative filter. Negative PE, which means when I compare with current PE with the sector PE. When I minus it, it has to give me a negative value. If I sort this one, so you get so many details because there are 4,749 stocks. Now I have to filter that out. How do I do that? So what I need to do is I need to go to 5-year return. I don't want negative return based stocks. Okay, I need a past. So it's supposed to be always the growth needs to be positive. So just make everything minus to zero values. Okay, and the 1-year return, the Nifty, right? What I'm going to do is there are so much percentage, right? I just want to have by comparing with Nifty, I need to have say minus 10%. The stocks which have performed lesser, at least 10% lesser than Nifty. Okay, now I got 354 stocks I received now. Okay, from this we have to find out which one I need to go with. Okay, so this is a tedious. So if you still want to filter, what I would suggest is what we can do is we can go with your stock universe. Here if you see there are different categories, like you can go with Nifty 100. Within 100 stocks you can filter it out. So you got 15 stocks now. Within 100 stocks, this is top 100 stock. This one. If you want more, you can go with Nifty 500. In that you get 75 stocks. Let's go with Nifty 500. Okay, I have 75 stocks now. So in this I need to find out which one I want to go with. As I mentioned, there also you can do, here also you can see small cap, mid cap, large cap. So anyway you can do whichever way you want. And basically these are the way you can filter it out. So from this the list I have, top one is Rajes Exports. Let's see what is Rajes Exports, how it's Rajes Exports is doing. If you see current price is 350, PE ratio is 7.2, 1-year return is minus 60. You can see, right? So 5-year EPS growth is 2.5, profit is very less 0.5. But it is, let's see what is this Rajes Export is doing, right? So for this, let's go to screener. Okay, if you go to screener, you will get a good idea. Okay, what is happening is PE is 9.4, which is less. We understood that. And if you see the book value is 516, the current price is 306, which is price to book is 0.71, which is like it's trading lesser than book value, right? This is a very good. We can, by seeing this, it's very attractive that it's trading lesser than its book value. If you go to see the PE chart, you can see how it is performing. So this is the reason I keep on telling to do some fundamental analysis. If you see sales and expenses, if you see increasing, then again decreasing, decreasing. But another thing is, if you see expenses, it's almost same. Your sales and expenses are almost same. Then how will you get a profit margin, operating profit? Where will you get operating profit? If you see 334, now it is 50. Then it's a very bad sign. It's dramatic fall. Why it is happening? You can expand and see what is the reason. It's a material cost, 100% material cost. What is it possible? And 0% for employee cost. They are not spending anything for employee. They are spending everything for material. Then how they are? I don't understand this particular thing. Okay, this itself it's ruined my planning to pick this stock. But I'm just going through so that you can understand what are the things you have to look at when I'm doing a fundamental analysis. So debt also is very less. It's a very good sign, but the fundamental analysis is good. So if you go back and see sales and expenses are very bad. If you see the cash flow, just look at the cash, minus 10,000 in 21, minus 4. What is happening? Why suddenly minus 10,000? In the past this many years, if you see from 2013, it was only like 2,500. Again, that whatever you received is gone here. You received here 4, 2, so this is 6, 8, again 2 gone, 8 plus 3 is 11, 11 plus 2 is 14, and 10 gone in that. What is this one? I don't understand this entire thing. And if we go and check the shareholder patterns, okay, one company, the FIA is Mauritius. Always Mauritius means I feel doubt, so I don't believe that company. Go and see the DA. I'm able to find only LIC India. Nobody has invested in this. LIC will invest in any company. So this one purely rejected. Now let's go to the next one. Just Delta Car. Let's see what is Delta Car. 1-year return is minus 52. 5 years is 10, 9. It's positive growth. Okay, profit margin is good. P is minus T8 if I compare, right? Minus 4. If you see Delta Car, book value is 87 and current price is 140. So it is almost trading like 1.6. You can see here, right? Price to book is 1.6 times it is, and price to earning is 13.7. Fine. Go to our sales. You see sales. Let's keep on increasing. Suddenly here there's a dip, and again it is back to the previous year almost. It is coming closer. Here you see expense is 171. If I expand this one, material cost, employee cost. Now you just check about Rajes Exports, what it was. This is an example. You can compare, right? And see the debt. Debt is almost debt free. Okay, not that bad. Let's see the FIA and DA is holding. FIA, BOFA, Goldman Sachs. I don't see a Goldman Sachs in this year. I don't know what happened there. They withdrawn or what, but they are completely out, I guess. It's not there. So Hara Global, BOFA. So some good amount of FIAs are investing in this. If I see DA, HDF Quant. So Quant is the one like which I am more fond of. Like they do, I like the fund house basically. They recently started to add into their fund, small cap and also they increased the, so this is a good sign. And also I gone through some news. For example, I went through a news so where it was said that Delta Corp was filed some case against GST. They have supposed to pay some 6,000 crore GST or something, and currently it is being withdrawn or something. So it is withdrawn, I think so. So that is a good news. So you have to go through news as well, what is happening in the market, right? So let's see the technical chart of Delta Corp. What you can see is how currently it is trading at the price when it was being 2016. Okay, it was around 2016 at the same price, and during the COVID time it broken that support. Okay, this was that area. It went high, then again the COVID time it broke that and went again breaking that one, and again it is trading at the same level. You see, almost it is going back to 2016, and the reason is that was I told, right, the news I read like 6 months back or something. They have some kind of a case, so that is where the gap down and some kind of shorting happened. This short has happened and it went down. And if I see the next support level, right, that is where it has taken the support. It went back, and if you see this area, this particular candle, it's a good volume candle. The RSI also is going up in good direction. It is getting momentum, and if I enter into this stock, okay, for example, if I enter even the next day in the current trading day, if I enter here at this price, and my stop loss can be at this level, the previous volume candle. Okay, this could be my risk, and what is my reward? My reward is this list. Okay, see the risk reward rate. So just with how many rupees? 141. This is 133. Some 9 or 10 rupees. Okay, 10 rupees risk I'm okay to take. This is putting a target of 263, which is 140. There is a 60, then 60, 120. Almost 120 points I'm expecting, right, with this risk. If I invested on this one and then this is my stop loss, so this is the reward I'm going to get. I feel like based on my learning, I feel this looks okay. So this is how you have to analyze your stock. This is how you have to filter and go step by step. All these checks you have to make, and if you want to take more risk, go and find the stocks in small cap, but you have to do a thorough research on the companies. If you want to take less risk, for example, if I go to my filter here and I just want to go with the large cap, okay, these are my large cap. Okay, if I just go with this list of alone, Hindustan Zinc, Infosys, you can find out which stock you want to get into, right? So see Infosys, right? Let's see Infosys. Do a technical of Infosys. Look at Infosys. So Infosys almost given a breakout. So it's kind of we missed a chance or something. Or you can enter here. Okay, this is your entry point, and this candle is your top loss, and your target is this high now, this is my risk. This is my risk, which is 1578. This is 1079, which is how much? Almost 100 points. So 100 rupees risk, and how much I'm going to take? 1949 from 1500 to almost 400 points I'm expecting. 100 point risk and 400 points reward. 1:4. You can see the risk reward ratio over here. Just 3.6. So sometimes I don't feel this is a good trade. You can enter. It's not a big deal. It's a good opportunity. Only company also is a good company, so it's not bad. But the profit wise, I feel we should have entered long back, because Infosys, this is a very good company. I feel like you guys would have been holding and accumulating this from long time. So these are not necessary to actually look into that. My assumption is already you might be having this stock. If you are not having, you can start buying now only. I'm not recommending you to buy now. It's just it's based on my opinion. Okay, you have to go and do your own research, analyze, take your risk appetite, calculate your risk reward ratio, and if it suits for you, then go for it. Hope you understood the method, how to pick the stocks in an undervalued stage, and how to do a technical analysis, how to read the news, how to relate all those things together. So this is very important, guys. If you are not following these steps, I'm repeating it. First, you filter it out based on your 1 year return. Second is 5-year growth has to be positive. Third is your PE, sector PE, and your stock PE has to be less than that sector PE. And fifth is your market, how the news is being about news around the stock, right? Go and check the news around the stock. What happened? Read through the annual report, understand their what are the notes they have given, what are the action plans they have taken in the annual meeting. All those things you have to go through that. So these steps you have to follow. You follow that, you are a perfect person for our Mindful Finance group. Hope you like this video. If you like this video, please give us a thumbs up, and please do share it with your friends and families, and don't forget to press the notification icon. Thank you.